and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you like the program, give us a like, subscribe, let the algorithms at YouTube know. My guest today is Kelvin Lei, co-founder and CEO of Aqumon, a Hong Kong wealth tech. I spoke with Kelvin about big robo-advisory trends in Hong Kong and mainland China, whether it's serving banks and other institutions or going direct to consumers. Kelvin Lei from Aqumon, welcome to DigFin VOX.
Thank you for having me.
Oh, my pleasure. I'm looking forward to this. I've known you, the company Magnum, and then your business Aqumon and wealth tech. Watched it grow. You've got an interesting, diverse model. Before we get into that, I would like to get your thoughts on where do you think wealth tech in Asia is right now? What do you see happening?
Yeah, thanks, Jame. It's my pleasure to be on your podcast. Actually, we've been talking this almost every quarter, or we catch up very regularly regarding wealth tech development in Asia. Actually, in the past, I see in the past 2 years, actually under the backdrop of this COVID-19, we do see the wealth tech is still growing very fast among institutions, especially in Asia. That reflects from our top line. We are growing almost like 400% from our top line revenue last year, and even in the very bad market conditions earlier in the first half, we still grow almost 300% in terms of revenue. It all because the financial institutions, they are looking into more and more wealth tech solutions to facilitate their end clients and to give scientific investment methods to their retail or to their wealth management clients. So I do see the trend is still growing, even though the financial market has got hit very hard in terms of the Fed hiking and also the war and COVID-19. But still, the demand is there because they have these needs to change their business model into more, systematic, automatic, and data-driven wealth management solutions. And the clients we reached are, the banks, especially virtual banks, securities house, wealth managers, insurance companies, and also some other, investment platforms. And their needs is pretty simple. They just want to upgrade their system and get ready for the next wave.
What is the difference? So it sounds like there isn't a huge difference amongst these clients from your perspective. The need is similar, and so you're delivering. The difference is just, I guess, integrating into their particular systems.
Yeah, we divided into two categories, two big categories of the demand. The first one is to have this portfolio construction system. For example, we have this robo-advisor as a service, which can just plug into the financial institution system to let their clients to have long-term asset allocation investment method. And the second part, we call it the selection part. If the institution have more than like 1,000 mutual funds, if they have like several thousands of ETFs, we can help them to select the best mutual funds / ETFs using the algorithm, using the scientific way to do the investment.
So that would be customized per user rather than just a selection for that institution to buckets that they can sell.
Yeah, exactly. So I think in both sides, the institutions are looking for the solutions as well as they want to enhance their user journey, right? They want to enhance the UI UX to give better solutions for their clients.
What's the difference when you work with a very retail, consumer-facing, high street type of bank or brokerage or agency versus, do you also do work in the wealth management private banking space?
Yeah, that's two different category of clients profile. For example, when we cooperate with retail banks or large securities house, their target clients are, the investors who are lacking of the RM's carness, and the investment amount is less than 1 billion Hong Kong dollar, and they have no RM to cover them. So these clients, we offer robo-advisor, this kind of system to their clients. But for the wealth management or like private banking clients, their needs is quite different, right? They need the analysis of their current holdings. Actually, this year they need a lot of this analysis because a lot of them is suffering the loss, and they need some very scientific asset allocation advice. So that is all empowered by our algorithm engine, and we provide this kind of service to private banking clients.
So if you're on a private banking world, you would be using Aqumon to not just create very basic long-term portfolios, but also the data to try to basically provide color or give the RMs, the relationship managers, a way to paint a story, whether that story is good news or bad news.
Yeah, exactly. We do see this needs from a lot of like top third-party EAMs, family office, and also private banking institutions from our side. And their RMs need to be empowered from this scientific or data-driven ways to persuade the clients that what you are having now is having different problems. So for example, too concentrated in Asia, too concentrated on like high yield bonds, and what's the factors is influencing your performance. These kind of diagnose of their portfolio is very popular and can gain their clients confidence or trust in a very short term, and then we can give them more color on what's happening in the world and what's the allocation you should do from the perspective of a quantitative method.
What is the way that you see the way you slot into that value proposition for the private banking side? For the consumer bank, it's pretty straightforward. I mean, you probably are most of the long-term investment proposition or the retirement savings scheme. They might white label it under the bank's name, but essentially they only need what you have. Whereas for a private bank, they're supposed to be doing a lot more than that, I would think, right? So they're supposed to either selling a lot more sophisticated products, or they're supposed to be doing a lot more handholding, or however it is that they justify the fancy offices and keep those fancy clients.
Yeah.
So do they even talk about Aqumon as being part of the mix? I mean, do you have any sort of client-facing visibility in that story, or are you just a very small piece of their machine?
Actually, we have this business model of the SaaS model since last year. We got the regulators approval to connect with the financial institutions. So now the financial institutions, if they are using our robo-advisor as a service model, their end clients can see our brand. So their end clients they will know that all the procedures, all the algorithm behind this, and the regulation part is done by Aqumon. So this is a very significant upgrade from our side. For wealth managers, for some private banking clients, we are the enabler of this quantitative power with those RMs, and for this part, we are partnership with a lot of private banking clients, and they will trust us because we may send some of our scientists to talk to their end clients. And I think for all the institutions we cooperate with in GBA area, more than like 80 different kind of financial institutions, most of them treat us as a partnership and not just a vendor.
Yeah. Right. What does that say about the state of whether it's consumer or private banking? Where do you see those industries going from your perspective as this SaaS provider?
I think it's the biggest trend, right? If you do things that is on-premise or like tailor-made for each of the clients, then it's the from the corporate perspective, it's not a very profitable business, and you cannot expand to a bigger market. If you can standardize the procedure, if you can do things that is modularized and can offer different kind of products with different levels to the end clients, then your business is can expand to different region. For example, I'm going to Singapore next week to talk to more institutions over there. And you can expand your business in different regions because of this SaaS model.
What's the difference between selling this model to institutions in Hong Kong or Singapore versus mainland China?
Hong Kong and Singapore, they both sharing the same logic or value in terms of as a financial hub in Asia. And the cities both have similar infrastructure in terms of global investment, global talents, and also the other facilities of the investment. So I do think these two areas can share some of the models together. So you can see a lot of robo-advisors, 2C robo-advisors come to Hong Kong because they think they can expand to Hong Kong in a similar way. Right. But in mainland China, it's quite different because it's a financial market that has capital control, have different kind of regulation method and a different law system. So when we do business there, we have the license, private fund management license, PFM license in mainland China. This gives us a lot of credit to do business over there. If we are not having any license to in mainland China, actually we can't do anything because the regulators is now very restricted.
Beyond having the need to have a license to operate in mainland China, what is the demand like? On the one hand, the banks themselves are generally considered not as sophisticated as banks in an international financial center. At the same time, the client base is much more, maybe this is a little outdated, but traditionally would be much more used to having financial services and all kinds of services on their phone, much more mobile ready, baked into one of the big ecosystems there. So whereas in Hong Kong, at least up until COVID, that would not be the case. Maybe it's changing here now. So what is business like in mainland China compared to outside in terms of what they need from you, what banks want?
Yeah, and I think that's a very good question. What's our observation is that the IT infrastructure among the financial institutions in mainland China is much stronger, much more advanced than those abroad. For example, the clients we are covering, in Hong Kong, even they are like Chinese institutions, they are sharing some of their IT talents with their mother bank in mainland China. So their entire the app, the transaction, the IT infrastructure is very advanced, and that make us easier to cooperate with them.
Okay.
Because everything we do is based on electronic trading, automatic trading platform. If you don't have this platform, or the platform is vendored out with the third party, which is very outdated, actually we cannot plug in our service to their end clients.
Right.
Some of the Hong Kong institutions, for example, the insurance companies, they like our solutions very much. But when we talk to them, we find that their fundamental IT infrastructure is so lagging behind that we cannot do this kind of business.
Right.
So
So when
that
I made that assumption that the banks are less sophisticated in China, which may be true in a business case or a credit lending case, but in terms of the IT and the setup, you're saying that I'm wrong and that they're actually way ahead. Maybe because they're younger and so they've built better.
yeah, in for example, China Merchant Bank, right? How many IT talents do they have? 10,000, 10,000 in Shenzhen. So that's a really big force. So when we cooperate with them, for example, one of our biggest clients is the CMB Winlong Bank. They are sharing some of the IT talents with China Merchant Bank in Shenzhen. So when we develop our robo-advisor with them, it is really smooth, right? They know the product, they know how to plug it in, they know how to connect the APIs. That's the advanced part. But as you said, for example, when related to financial markets, when related to the investment overseas, right? Because the markets in Hong Kong, actually Hong Kong is a very open market. You can invest directly to the Europe, to the US, to Japan, and they need a very scientific way to guide them. So that's why we are existing and we can provide our service to their end clients.
Right. So in China, it's much faster to integrate. Their IT is better in that regard. But what they can do with it is more limited because of capital controls and controls on where assets can move.
Yeah, exactly. Yeah, that's the opportunity.
Yeah. With the Greater Bay Area as a theme, I think we all expect things will open up over time. COVID's obviously delayed a lot of that. But how do you see that impacting wealth management and wealth tech? We already have some connections via the stock exchange. We've got the Wealth Management Connect scheme and so on, but it's very early days. You're in the heart of this. Where do you see it going? What is the thing that people should really think about when they're looking at what this GBA concept means?
Yeah, I think the GBA concept is, I call it the super connection in terms of people, in terms of capital in and outflow, and also the data connection between Hong Kong and mainland China. And I think it's the biggest advantage of Hong Kong compared to Singapore. Right now, Singapore is so hot. Everybody is talking about Singapore. Everybody goes to Singapore. But remember, right, only Hong Kong have this advantage of this ETFs connection, the wealth management connection, swap connection, all these kind of things that is directly to the financial markets in mainland China, which is a very large pool in terms of the money and the inflow. So I think we should, grab this opportunity of this GB area and all the connection channels of the capital markets to for the next wave, right? Even though now it's pretty influenced by the Fed hiking at this moment, but I do think in the future this is gonna be the biggest opportunity for Hong Kong.
You came out of University of Science and Technology here in Hong Kong. You and your co-founder started the company there. But there's not that many well-known tech success stories in this city. We have lots of tend to be a bit light on the tech. Yet over in Shenzhen, we have lots of tech. People like to talk about this could be married up somehow. We could leverage one or the other. When it comes to the technology companies, is that realistic?
Yeah, I think everything is from the fundamental. For example, if you are going to do some fintech, you need to have these talents that is married together, right? One side is the financial guys, and the other side is the IT guys, and everybody came together. They are looking for one purpose, that is to have a very big market to grow their business. That's why in mainland China, you can see a lot of fintech companies that can grow very fast, for example, on finance, and the other guys doing business over there in the past 10 years, they grow very, very fast because they have a huge population base, and their adoption of the electronic trading platform, the other kind of fintech products can be very fast. But in Hong Kong, it's limited, right? The city only have like 7 million people. I have to say this thing, even though the population is not that big, but Hong Kong has the advantage of the deep pocket, right? The average wealth of Hong Kong people is pretty high, even among the world. So we need to figure out which part we are good at, right? You can't be both good at the IT thing and also good at the financing. So, for example, Aqumon, we are doing things in wealth management part. So we focus heavily on the R&D of the AI strategies, right? That's the key and the core part of Aqumon. And but we are not just selling this as a quantitative hedge fund. We wrap it up, but put into an IT system that can plug into financial institutions, can empower more of their end clients. That's our method.
What is the difference in your business between we've been talking about the SaaS side, a B2C business. You also had a direct consumer side to a retail business here. You said you have to kind of choose your spot. Do you have to choose between those two businesses, or are you going to continue both lines?
Actually, I think in the past 5 years, the biggest gift is that we have the experience of 2C products. We had our own app. We do our own marketing. We launch our own strategies to perform the real strategies, and we acquire a core of the true clients, which is totally believing asset allocation, believing ETF. So this is a very good treasure for Aqumon. And at this moment, we are still running this business. And among Aqumon's app, we have more than 20 different strategies, which is totally focused on asset allocation, core and satellite in different kind of thematic investment. It is still very, advanced and outstanding in Asia in terms of this 2C product.
We've seen some of the robo-advisors facing consumers in Singapore start to hit some pretty big AUM numbers. And Dallas now is doing around 2 billion. Where are you with your AUM, and how far away are you from being profitable on that side?
Yeah, we are growing very fast. As I said, the top line of the revenue is growing like 3 times or 4 times per year. And we are about to achieve break even, so which is good news even in the financial markets like this. And the business method or the model is slightly different in Hong Kong and in Singapore, because in Singapore we find that the clients is more used to the SaaS allocation concept, but in Hong Kong maybe it's slightly like lagging behind. But I do think a lot of the financial institutions that they are trying to onboard robo-advisor or the other digital wealth management method. It is getting better. So yeah, I think different business model generates different companies, and we just want to be a great company.
You raised about 30 billion in a pre-series B late last year from your various venture backers. Do you have any more funding needs going forward?
Yeah, actually, I see the news that in terms of the fintech areas, there are only 2 areas that is still growing in terms of VC activities. One of them is wealthtech. We do have a lot of the VCs that is still looking at our company, and we are keep talking to them. But their mode is quite influenced by the secondary market. So not in a hurry, because our business is growing very fast.
And you have enough runway to last out this rocky period?
Yeah, of course.
Okay, that's good to have. You also announced, I think it was earlier this year, a program with 2 Sigma, which is a well-known quant house in the US. Tell me a little bit about what you're doing with those guys.
Yeah, we actually the cooperation is because we share the same view of the business. Both of the companies is driven by data scientists. So that's the way we can cooperate because we are speaking the same language. And thanks to Kenny, the CEO of Two Sigma Asia, he make the impossible possible, right? They are very large hedge fund in quantitative side, and we are startup in Hong Kong. Now we are cooperating in a risk analysis tool called Two Sigma Wen, and then we embed this very amazing product into our platform, and we can offer this risk analysis tool to our institutional clients. It has been really successful with our institutional clients.
Yeah, it sounds like on that data analytics and of which risk management would be a part. Sounds like there's a lot of innovation happening and a lot of sophistication that you're building in. But the robo products themselves are meant to be kind of pretty boring long-term investment, safe retirement kind of stuff. What is the do you see the product itself will stay at that very traditional mission, or do you see the technology is going to evolve into other things?
Oh yeah, that's a very good question. Actually, I talked to my colleagues, I talked to different investors, that robo-advisor should not be like things like at this moment, right? The US players, Betterment and the Wealthfront, if you can see their products, they are not changing it in the past 13 years. That's a problem, right? So why we try so many new things? We try different kind of strategies. We had smart hedging, smart rotation, like a crypto assets into our portfolio, like directly indexing, different kind of other satellite portfolios, because we want to enhance this concept. That is, robo-advisor should not limit itself only to asset allocation. It should be more than that. It should be core and satellite. And as long as it is data-driven, it is using quantitative scientific methods to achieve your investment goals, that is robo-advisor. It can be a very, very big concept. And
what about the gamification trend that we saw with Robinhood or eToro, these kinds of brokerage services? Is there a role for gamification in what you do, or is that negative?
Those gamification is only to accelerate their trading activities. It's not a case with should not be the case with long-term investment or truly asset management method, because if you are trading frequently like what Robinhood has offering, it's not good for you. So I do accept that we should improve our UI UX, making it more user-friendly in terms of wealth management.
Last question, Kelvin, and thanks for your time today, is what do you think, where will the wealth tech industry in Hong Kong be, let's say in a year from now? What are we going to be talking about?
We are seeing, actually, because we are doing business with large institutions, so we do see a lot of the institutions, they are launching their robo-advisor in the next 6 to 8 months. So we will see a new landscape of the digital wealth management industry in Hong Kong. And also with the connections with mainland China, and I do think there's a new money inflow into the Hong Kong's wealth management industry. So I do believe that this industry can have a huge upside in the next year or two.
Great. Well, look, it's been a pleasure to speak with you today. Thank you for joining me on DigFin VOX.
Thank you, Jane, and talk to you later. Yeah.